This week, Tavi Costa of Crescott Capital wrote, quote, "It's hard to find a better-looking chart, in my view, particularly with over 50 years of historical perspective. After numerous failed attempts to break into new highs, investor sentiment has grown weary and confidence in a major breakout has waned. This kind of fatigue often sets the stage for contrarian opportunities, moments where investors shift from being caught off guard to experiencing a wave of FOMO as explosive moves materialize. Silver is approaching that moment in my view, and after a strong performance in 2024, I believe 2025 will be the year the metal will finally take out its highs from 1980. To start 2025, spot silver is again trading over 30 an ounce, but the front month COMEX Silver futures contract is currently trading nearly $1 an ounce higher than spot derived in London. And that is the major story of the precious metals markets of late. Also of interest for silver bulls is the fact that the COMEX Silver futures contract 200-day moving average is about to clear 30 an ounce, which is a level of rarefied air throughout this full fiat currency era. One has to go back to the years 2011 through 2012 to find a time frame in which that 200-day moving average hovered above $30 an ounce for long. Speaking of the $30 an ounce tamp line in silver, it was announced this week that CFTC Chairman Rostin Bingham will be departing from heading the agency on January 20th, 2025. Continued fears of Trump tariffs are again sparking this latest spot versus COMEX futures silver price divergence, again hitting nearly $1 an ounce difference yesterday as reported by Bloomberg and others. The bottom blue line on this chart shows a longer time frame, about 1 year, measuring London spot versus COMEX futures silver price divergences. You can see a spike early last month in December 2024, and of late to begin this year in January 2025. A similar historically high premium for COMEX copper futures above LME spot is also forming, given the current concerns over potential coming Trump tariffs. Thus, metals like copper and silver are being pulled stateside by traders who want to avoid having to pay extra tariffs potentially later in this year and to follow. Here's another illustration of the situation in the silver market at the moment. A market that is now near record-wide contango, the opposite of backwardation. The far left bar being cash or spot price for silver, and the far right bars being silver futures priced out until December 2029. Here's where this current versus furthest future pricing discrepancy for silver stacks up when compared to all data throughout this full fiat currency era. Basically, we have to go back to late 1979, early 1980s silver bull market to find such large nominally wide near to later future contract price spreads. COMEX deliverable registered silver inventory levels have more than doubled from their near 30 million ounce low in the summer of 2023 to now just over 73 million ounces to start 2025. Similar to silver inventories reported by London, much of the COMEX silver inventories are unsecured silver, reportedly backing many of the world's largest ETFs like SLV, for instance. The LBMA reported silver inventory levels in London fell negative 23 million ounces to close last month, December 2024. That's nearly an all-time low level. They have some reported 827 million ounces, of which reportedly 551 million ounces is spoken for by unsecured silver ETF holdings in London. This leaves a semi-opaque 276.5 million ounces, or quote, float of silver in London, with no way of knowing fully how much of that silver bullion in terms of those inventories are available under the right market conditions. The Silver Institute this week published estimates for the world silver supply deficit in 2024, reporting it being negative 282 million ounces, meaning the world used or demanded about 1.3 billion ounces of silver last year for things like industrial inputs, investment demand, and net silver ETF inflows, compared to just over 1 billion ounces of silver supplied by new mining metals and recycled silver supplies. So we are apparently running a just-in-time world silver market hovering around the key $30 an ounce tamp line, with no end in sight for silver supply deficits for the silver market to come. Yesterday, Daniel Galli, senior commodity strategist of TD Securities, discussed the impact potential new tariffs on the physical 1,000 ounce silver bullion bar sector, specifically COMEX versus London supplies. His insights suggest he will likely also be in the falling spot GSR camp for 2025. Have a listen.
at TD Securities. Daniel, thanks a lot for coming in.
Yeah, thank you, Paul, for having me.
Tell us about this. This is an interesting concept, that tariff threats, and we know where they're coming from, and we know the possibility of response from other countries, including Canada, are disrupting the markets for precious metals.
Yeah, absolutely. I mean, it's hard to see it in flat prices, but over the last month, there's been a huge disruption in precious metals markets, where the threat of universal tariffs on metals is leading traders around the world to bring metal in from London and other global venues into the U.S., only to hedge against the risk that tariffs will be implemented on precious metals. Historically, they haven't. Precious metals have been considered money in effect. But if they were to be considered or subject to tariffs, then traders holding short positions against metal that they actually hold somewhere else in the world would be subject to a substantial loss. And in order to hedge against that risk, they're bringing metal into the U.S.
This is physical metal coming into the U.S., is it?
Absolutely, right. Yeah. And what's interesting here, Paul, is that it can inadvertently lead to a stock out in the world's largest metals vaulting system for silver in London. Right, this is the biggest story in commodity markets right now, I think, is that silver markets seem to be just completely sleepwalking into a potential stock out.
And what's a stock out?
Well, a stock out is a moment in time where the inventories of the metal cross a critical threshold below which the microstructure is challenged, right? And so if you think about how the world trades precious metals, physical precious metals, the global venue for that is actually sitting in London. But most people actually use US-based contracts to hedge price risks. So the challenge here is that the threat of universal tariffs is leading metal to go from the world's largest venue into the U.S., depleting that inventory buffer that traders use for over-the-counter transactions every day. And mind you, we're now in a fourth consecutive year of very substantial deficits in silver. And so this trend of depleting inventories was already set up. And this is simply something that's accelerating that process.
So this sounds price positive for silver in particular. Is that correct? And we're seeing silver trade at about $31 US right now.
Yeah, absolutely. I think there is the potential for explosive price action in silver if we do meet that critical threshold. We've seen glimpses of this in other commodities over the last few years. If you recall, copper last year had a very substantial rally on a similar theme. In previous years, palladium was a really good example of a market with a similar setup. And silver markets today just appear to be completely sleepwalking into this setup.
What do you mean by sleepwalking? That the price is not reflecting this this stock out possibility, this possibility that in physical inventories will get to a critically low level?
Yeah, the price is certainly not reflecting that. I also think that it's a very undercovered story.
Right.
So this is something that could potentially be very significant, but macro investors are just completely flat in silver markets, and nobody's really paying attention to this.
Is there information that retail investors can follow this story with? Are there publicly disclosed numbers from London on silver inventories that people can watch to follow this story?
Yeah, absolutely. I mean, the LBMA, which is the custodians of the metal, they publish some data on their vaults on a monthly basis, so you can certainly follow that. There's a lot of work that has to be put in order to try to estimate how much of that metal is actually freely available for purchase. So there might be 1 billion ounces sitting in London vaults, but only 300 million of that is actually freely available for purchase, according to our estimates.
So do you have a call on silver, on the silver price?
Yeah, we think silver is going to end the year closer to $40 an ounce. So the substantial gains from today's prices.
Wow. What is your call on gold?
Well, gold is an interesting one, right? We actually thought there were some signs of exuberance heading into U.S. elections. If you think about the setup back then, you had central bank buying activity actually substantially slowing. Macro funds who buy gold for to trade, the Fed outlook, the global economy, and so on and so forth, were holding extreme long position sizes. So at the same time, the physical market had ground to a complete halt. There was a complete buyer strike. But you fast forward to today, and there are signs that the buyer strike has finally ended. We think there's a strong correlation between currency depreciation pressures in Asia and the strength of the physical market. Clearly, the threat of tariffs on China has led to some currency depreciation pressures there, and there are some signs that the physical market is finally reigniting again. That could lead to more central bank buying activity, but also institutional and retail buying out of Asia, which has been one of the big missing pieces for gold prices to continue making gains.
So you seem to point to very different factors in the gold market versus the silver market. Do you see something of a decoupling of the two metals in 2025? Typically, if I'm not mistaken, silver has tended to ride gold prices, right? And there's this ratio that people talk about between the two prices.
Yeah, absolutely. I think typically that's the case because investment flows, which are correlated between gold and silver, tend to drive the overwhelming variation in the supply-demand balance for silver. Silver is overwhelmingly an industrial metal. Solar has been a bigger contributor to total demand growth over the last few years in a very significant way. And so there is a decoupling that's happening under the scenes. But I actually would argue this is going to be a recoupling in the sense that silver is trading extremely cheaply relative to gold. And so from a long-term perspective, there's a long way to go for silver only to catch up to gold's price performance.
Okay, you see silver getting close to 40. What do you see gold doing in 2025?
We think gold is going to be fairly range-bound. There's going to be opportunities to trade it both ways throughout the course of the year. But we're actually expecting the Fed to remain on a prolonged pause in the first half of the year, and that could constrain some of these macro fund positions, which have subsided since the U.S. election, but still remain bloated. But towards the latter half of the year, we actually think the Fed is going to resume its cutting cycle more aggressively than is currently priced into markets, and so there could be some opportunities to buy gold throughout the year.
Daniel, thank you for coming in today.
Thank you, Paul.
On the other side of this short break, we'll examine this week's trading action in spot silver and gold markets. As well, we're going to see which central banks have been recently reporting having bought more gold bullion reserves, as the bullion bull market over bond bear market trade continues in record size for the third year in a row running. Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates, and be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
What's better than an ounce of free silver? How about 500? Get ready for another monster-sized giveaway with the SD Bullion Monster Box Sweepstakes, featuring 500 of SD Bullion's very own Silver Tree of Life coins in a monster box. This highly detailed piece of silver is a beautiful addition to any collection, and it features a hidden inscription on one of the tree branches that changes every year. So don't miss out on this exciting silver giveaway from SD Bullion, because someone has to win it, and it might just be you. Click the link below for your chance to win.
I'm still traveling this week and creating this week's bullion market update at 10 a.m. Eastern this morning, Friday, January 10th, 2025. Currently, spot silver and gold markets are trading well to begin the day and are likely to finish the week up overall. The spot silver price just popped, trading close to $30.60 an ounce bid, and the spot gold price is threatening to close in on the 2,700 an ounce overhead resistance. The spot gold-silver ratio briefly dipped to 87, and we'll see if the falling trend continues in this current rally. China and their central bank, the PBOC, declared adding another 10 tons of gold bullion to her official reserves in December 2024. That's now 2 months in a row of Chinese gold tonnage additions after a brief hiatus in the middle of 2024. Other major central banks of note who also declared adding tonnage to their official gold reserves include Poland, adding 21 tons in November 2024, and 90 tons overall through the first 11 months of last year, as Poland seems destined to reach its stated goal of securing 20% of the nation's sovereign savings owned in gold bullion outright. India, Uzbekistan, and Kazakhstan are other recent buyers of more official gold bullion reserves. Estimates are that on net, central banks were on pace to buy another 1,000 metric tons of gold bullion reserves last year, 2024 alone. That's on top of the more than 1,000 metric ton gold bullion reserve buying sprees in 2023 and 2022, respectively. This amount of global government gold bullion buying is unprecedented in size, and it's signaling to the world that's paying attention at large that we are indeed in the midst of a gold bullion bull market, Still, certainly in the early innings, especially when considering non-existent Western world market participants yet. And we also have a very real growing threat of a silver stockout in 1,000-ounce silver bullion bar supplies to come. That will be all for our weekly SD Bullion Market Update. And as always to you out there, take great care of yourselves and those you love. If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.